Now we head over to Zambia, where Lishala Situmbeko, head of Treasury Sales and Structured Products, is standing by. A very good morning to you, Lishala. Now let's look at the currency. There has been appreciation coming through for the currency. It has been appreciated about 10%. The government coming out and saying that they are very happy with this appreciation that's come through for the currency, and also added that they don't see it appreciating to a level that will affect exporters. What are your thoughts on this?
Well, obviously, I mean, what has been happening in the market, we need to look at, the fundamentals. What we've seen is, over the past couple of weeks is legislation that has been introduced by the government to compel all transactions that are carried out within the Republic, that is within the borders of Zambia, to use the currency, which is the kwacha. Now, obviously, what that has done is to try and, it has boosted the demand for the local currency, because now what it means is everybody who would like to transact locally would need to use the kwacha. Now, in terms of, the appreciation that has come as a result of that, I think one also has to look at the fundamentals in terms of the numbers, where the economy is standing right now. We've got, foreign reserves, which are over $2.3 billion US. And also, the current account has been in a surplus for quite some time now. And looking at those factors put together and the demand and supply dynamics that have been going on in the market, I think the kwacha is basically trading where demand and supply is at the moment in terms of the economy. Of course, I wouldn't be able to know, whether anybody wants it to appreciate to a certain level or not, but I think we'll try and focus on the market and see how the supply and demand dynamics prevail.
Some are also worried that when you're borrowing in local currency, it's much higher in terms of interest rates when you're borrowing in dollars, or dollars seems to be much cheaper. Your thoughts on that type of scenario?
Well, borrowing in local currency, the interest rate level has a history. The kwacha has been, in terms of the money markets, we've seen a situation whereby the government deficit in the past has influenced the level of interest rates within the economy. And I think the government has tried to make sure that, interest rates are brought down to a level where businesses within the local economy can be able to afford. Now, borrowing in local currency or borrowing in foreign currency, it may look cheaper, but of course, one also runs the foreign exchange risk that goes with it. So it's a situation where the way I see it is, once the market or the market economy in terms of the demand for the local currency starts to pick up and monetary policy is geared in a manner that will be able to ease interest rates on the domestic market, we should see this be able to level out going forward.
Now, talking on interest rates, the central bank left rates unchanged around 9%. We did, however, see inflation ticking up to 6.7%. Your thoughts on the type of stance that the central bank will take in terms of interest rates going forward, given the fact that inflation seems to be on the rise?
Well, I think we've only seen inflation rise, I think, month on month. Now, the 6.7 where it's standing at the moment, what one obviously has to realize is monetary policy is a forward-looking kind of situation. One does not want to start driving while looking at the rear-view mirror. So from the forward-looking perspective and looking at the statement that the central bank has issued, it would seem that in their view, they do not see the economy being impacted that much, and they felt the interest rate in terms of the policy rate being left at 9%. Now, going forward, we see a situation where we're about to enter the food marketing season. And generally and historically, what we've seen is when there's more maize in the market, that is, the commodity which is generally consumed by the majority of the population, we tend to see once maize hits the market, prices tend to ease down, and that tends to filter in through the level of inflation. And looking at the statement from the central bank, that seems to be the view that they take. And I think looking at the middle of the year, usually that's what would prevail, and I think I see that happening going forward.